Hey everyone! Welcome to a fun and easy way to dive into the world of investing. Today, I'm Joy, and I've got a ton of hot news from around the world to share with you. From the political drama affecting the global economy, like the second meeting between Trump and Putin, to big news in the investing world, like Warren Buffett buying shares of UnitedHealth even when the company was in serious trouble. We'll also get into the rumors that the U.S. government might take a stake in Intel to boost domestic chip production. And finally, we'll ask a big question. Can Broadcom become a new competitor to Nvidia in the AI market? Each story is full of opportunities and challenges you won't want to miss. Joy Up Invest Podcast. Invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours. Let's kick things off with some global politics that always affects the stock market. President Trump has announced he plans to meet Putin again in Alaska after their first meeting this Friday. He even said this second meeting will be more important because the first one was just to frame things out. What's interesting is when he was asked about negotiating on rare earth minerals, which are key materials for high-tech industries, Trump completely dodged the question. He said that topic was not as important as the peace he hopes to achieve. For those of you following this, it's definitely something to keep an eye on. Trump also talked about the domestic economy, saying that inflation, which is when prices for goods and services keep going up, has fallen to a perfect level. He also mentioned that the stock market is soaring. We'll have to wait and see if the economy really goes in the direction he says. From an investor's perspective, this news shows that global politics always impacts our investments. When international relationships get better, so do opportunities for trade. This could be a good thing for the overall stock market in the long run. When the leaders of two superpowers decide to sit down and talk, it's a very positive sign to watch for. Now let's look at some news that will get any serious investor excited. Warren Buffett, the world-renowned investment guru, announced through his company, Berkshire Hathaway, that he has acquired 5 million shares of UnitedHealth Group, UNH, a healthcare provider. That's worth over $1.37 billion. This news sent UnitedHealth shares soaring by 7%. This is even though the stock had been struggling with disappointing earnings, rising medical costs, a government investigation, and most importantly, the biggest cyber attack in U.S. history, which affected the personal data of over 192.7 million people. But as soon as Grandpa Buffett invested, the stock came back to life. It's like he has a special power. Berkshire Hathaway also increased its investments in several other companies, like Nucor Corp, a steel company, D.R. Horton, a home builder, Allegion, and Lamar Advertising. However, they did reduce their holdings in big companies like Apple and Bank of America. This was a major portfolio adjustment. What we learned from this news is, don't give up on a struggling stock too soon. Warren Buffett's courage to invest in UnitedHealth during its downturn shows his long-held belief in value investing. He probably saw the problems as temporary and believed the company had strong long-term potential. Finding a good company that's having a temporary problem could be a golden opportunity for us as investors. Next up, in the world of technology, there are strong rumors that the Trump administration is considering taking a stake in the giant chip-making company, Intel. This comes after Intel's CEO had a direct meeting with Trump. If this is true, the investment would be to support Intel's expansion of its domestic chip factories, especially in Ohio. The U.S. wants to strengthen its semiconductor production to reduce its reliance on other countries and compete with China. This news made Intel's stock jump by 7%. It shows that investors are interested and believe that government support will help Intel become a tech leader again, even with the many challenges it's faced. This is a perfect example of how politics directly affects business. When the government supports a domestic industry, it's a huge positive factor that boosts confidence and creates massive opportunities for growth. This is also one of the great reasons why we should always follow the news. You won't want to miss out on opportunities like this. Now, let's talk about another chip equipment company, Applied Materials, AMAT. The company announced better than expected earnings for the third quarter, but what shocked investors and sent the stock down 11% was its sales forecast for the next quarter, which was much lower than analysts had predicted. The CEO said the main reason was the uncertain economic climate, and the CFO added that it was because of inconsistent demand from key customers. In simple terms, their main customers are unsure when they'll place new orders, which makes it hard for the company to see a clear future. Strong current earnings don't always mean a strong future. This news teaches us that future trends are just as important as current earnings. The stock's sharp drop because of a weak forecast is a reminder that investors are always looking ahead. So we must not be complacent and should always research thoroughly before deciding to invest in any stock. Let's wrap up with a super interesting topic. The tech giant Broadcom, AVGO, is stepping up to compete for market share in AI accelerators, which are chips specifically designed for AI, currently dominated by Nvidia, NVDA. Broadcom doesn't just make chips, it also makes switches, which are devices that connect all the chips together in a data center. Without these switches, thousands of chips can't work together efficiently. Analysts see the AI accelerator market getting much bigger, and Broadcom has a high chance of growing significantly. But the question is, can it really become the next Nvidia? Some investors think Broadcom's stock price might be a bit high right now compared to its future growth potential, which we still need to wait and see, but it's definitely a stock to watch. This topic teaches us that the market is always competitive, and there are still plenty of opportunities for new players. Even though Nvidia is the current leader in the AI market, there are companies like Broadcom trying to innovate and grab market share. This is good for us as investors because competition drives development and adds value to the industry as a whole. Let's start with the first one, UnitedHealth Group, UNH. UnitedHealth Group is a leader in the health insurance and medical services industry. Its business value is very stable because it benefits from the continuous increase in demand for healthcare. The stock chart shows a strong, long-term upward trend, but it has recently experienced a significant correction, which could cause some short-term uncertainty. The forecast is that if the long-term support level of around $250 to $300 holds strong, the stock price has a chance to return to its upward trend. But if it falls below this support, it could enter a consolidation or sideways period in the medium term. Next, let's move on to a company with a very different investment philosophy, Berkshire Hathaway, BRKB. Berkshire Hathaway is an investment company led by Warren Buffett with a diverse and stable investment portfolio. Its business value comes from its ability to generate consistent, long-term returns. The stock chart reflects its cautious investment philosophy with slow but steady growth, which is different from volatile tech stocks. In the long term, Berkshire is likely to continue its slow upward trend. Its key support level is around $200 to $250, which is an interesting level for investors who want stability and consistent returns. Now let's talk about a tech giant facing some serious challenges, Intel, INTC. Intel is a long-standing semiconductor company with stable business value, but it has recently faced fierce competition from rivals like AMD and Nvidia. The stock chart reflects this challenge, with a wide sideways movement for a long time, showing that the market is still unsure about the company's future growth potential. To become an upward trending stock again, Intel needs to show a clear business turnaround. In the long term, if the company can't achieve outstanding growth, the stock price will likely remain in its current range, with key support at $10 to $20 and resistance at $60 to $70. Shifting gears to another key player in the semiconductor world, we have Applied Materials, AMAT. Applied Materials plays an important role as a manufacturer of chip production equipment. The company's business value is tied to the investments of major chip companies worldwide. The stock chart shows a clear upward channel movement, which means the price swings up and down within a range that gradually gets higher over the long term. The future trend is that the price will continue to move within this channel, driven by the endless expansion of the chip industry. AMAT's key support is around $125 to $130, while its resistance is around $250 to $270. And of course, we can't talk about chips without mentioning the leader in AI, Nvidia, NVDA. Nvidia is a leader in the AI-driven semiconductor industry. The company's business value has grown rapidly in recent years because its GPUs, graphics processing units, have become the heart of data centers and AI technology worldwide. The stock chart shows explosive, almost vertical growth, reflecting the company's strong market dominance. In the long term, as long as the AI trend remains a major global focus, Nvidia's value is likely to continue to grow. However, there may be some severe price corrections due to the steep price. The key long-term support for Nvidia is around $40 to $50, which is a very strong base. If the price stays above this level, the trend will remain clearly upward. Finally, let's look at another strong contender in the tech space, Broadcom, AVGO. Broadcom is another semiconductor company with strong growth. Its business value comes from its diverse connection and infrastructure technology, which are essential parts of networking and data center systems. Its continuous acquisitions have strengthened the company's position in the market. The stock chart shows a stable and consistent upward curve, indicating growth driven by strong business fundamentals, not just speculation. In the long term, Broadcom is likely to continue to grow, similar to the overall tech industry. The key long-term support for Broadcom is in the range of $150 to $200, which is an interesting level if a price correction occurs. And that's just my personal take, not investment advice, okay? Always do your homework, double-check your info, and remember, every investment comes with some risk. Before we say goodbye today, don't forget to like, share, and tap that notification bell on Joy Up Invest so you'll never miss our daily dose of juicy market stories from around the world. So what about you? Which stocks are you holding right now? Drop it in the comments. I'd love to hear from you. Catch you in the next episode. Bye!